Many times a company will need a business loan. So what kind of information do you think the bank will ask you if you want to get a loan from the bank? So if you ever go into a bank for a business loan, they're going to ask you for details of your company's accounting equation because they need to know what you own, which is assets, and what you owe, which is liabilities. But if you go into the bank and you only give them this amount of information, let's say your assets are 100,000, you tell them your liabilities are 70,000, and you therefore own $30,000 of those $100,000 of assets, the bank's probably going to ask you for more detail. And the report that shows the accounting equation in detail is called the balance sheet. It's a very, very common business report. So in blue is a balance sheet for a company called French Realty. We can tell it's a balance sheet because it has the name on the second line of the three-line heading. And then on the third line, it's saying that on June 30th, these are the balances of these accounts. So the balance sheet is simply a formal report displaying the company's accounting equation in detail. It's going to show the ending balances in assets, 11,500, liabilities, 2,000, and owner's equity, $9,500. And the assets must equal liabilities plus owner's equity. So that's why they call it the balance sheet. Assets, in this case $11,500, must equal total liabilities plus owner's equity. So does this balance sheet balance? Yep. Total assets $11,500. Total liabilities plus owner's equity $11,500. So when you're creating a balance sheet in your homework, the formula is simply the accounting equation. Assets equals liabilities plus owner's equity. So let's analyze this company's balance sheet. How much does this company own? Well, total assets are $11,500, so that's how much the company owns. So of those assets, how much does the owner own? The owner owns $9,500 of the $11,500 of assets. How much do others own? Well, that's the liabilities, $2,000. So let's compare this company's cash amount with its liabilities. Cash is $3,310 and liabilities are only $2,000. How much do customers owe this company? Well, that's accounts receivable, $1,490. So the company looks to be in decent financial shape and they might be able to get a business loan. But do we know if they're profitable? Can you tell from a balance sheet if a company is profitable? Well, first you need to know, well, what is the formula for profit, also called net income? Net income is revenue minus expense. Notice the balance sheet does not have revenues and it does not have expense. So we will learn later that there's another report called the income statement that shows if a company has a profit or a loss.